Are you new to real estate, struggling in real estate, wholesaler, cash buyer, and you're just looking for better ways to close more deals? You're in the right place. Each week, I pick a random house off the internet, analyze it for a cash deal and a creative deal. When I started this podcast, my goal was simple. It was to help beginners and struggling investors close their first deal or their next deal, all while using low to no cost tools to analyze properties and craft strong offers. Welcome to the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy, second generation realtor and investor with 19 years in the business. This is the weekly deal analysis. Let's get into the show. Before we get into this week's episode, I do have to ask one favor. If you haven't done so, hit that like button and find somebody to share this with that might also find some value. This week on the show, we are jumping up to Kansas, 918 South Sedwick Street in Wichita, Kansas, 67213. They're asking $130,000. They just had a $5,000 price reduction. It is a three-bedroom, two-bath home, 1,250 square feet on a quarter acre, and it has been on the market for 148 days. Let's take a look at these pictures and see what they can tell us. All right, so it's a little dirty inside. Dishwasher's got a big dent in it there, but the cabinetry looks good and new. And the same dirty floor. They must be using a cell phone camera or something at the horrible angle. That's just all ceiling there. Decent bath, bedroom. They must just have this thing nailed to the wall or something because there's no bar, curtain rod, or anything. Oh, reasonable. Pretty nice house. Fridge is beat up pretty good. This door is not straight. Um, all right. So let's see what else we can find out here. 3 and 2, vinyl siding, granite counters, laminate flooring, updated bath, tile, fenced yard. All right, so he's not telling us much there. And our experts are saying our value is 138.5 or 141. I think we're a little bit less than that. The median list price in the area is 135. Average days on market is only 34. I don't like this on Realtor, so we're going to jump back and just look at some of the other stuff that was popping in the next to it. So a little bit smaller, but selling for more. And kind of same thing here. And these are all under contract, so 195, wow. And we got a 136. That's a lot bigger. 132 for sale. 140. That's pretty. Same bed and bath, but a little bit smaller, a little bit bigger lot. All right, so I think all in our ARV or after repair value is going to be that $130,000. Because once this thing is cleaned up, I think it will be worth about 130. And here's our problem subject right here. So I think we've figured out everything we can on here. Now we're going to jump over to the InvestNest and analyze the cash deal. I've got it pulled up here on the InvestNest. Amazing site. It is very user-friendly, especially if you're a beginner. And it is pretty easy on the pocket, so it's very entry level versus like your prop streams and your privies that are 100 some dollars a month and list after list and all the information and data that you want. This is more of a kind of one by one, so you can't really upload a whole list. But what you can do that they do include in the price is this skip tracing right here. It is super awesome. If I want to contact the sellers directly, click this. They don't charge extra for it. It is included in their monthly fee. I'll have a link in the show notes down below that will get you 50% off of your first month and get you your first week for free. So try it out and see if you like it. If you do, come back to this video and drop me a comment and say, hey, I used it, I loved it. Or if you tried it out and you didn't like it, also come back and let me know. That way I can give feedback to the company. So they are saying that the value is almost 140 and an estimated rent is 1218, and he purchased it in 2021. So he's probably got a really good interest rate. This may be a good property to consider for a subject to just taking over the seller's mortgage. Because if that, then this is just an estimate, but if the payment is there and the rent's there, this might be a good property to try to take over subject to. I'm not doing that analysis today, but if you want me to, drop a comment below and I'm happy to do one. All right, let's see what else they're telling us in here. Finance details. And it's a VA loan. This guy bought it for 127. It looks like he's been trying to sell it for quite a while. Hmm. Yeah, all right, let us go in and analyze the creative, or excuse me, the cash. We're just going to call this the property address. All right, so we are saying our ARV or after repair value was 130. On a cash price, I'm going to offer 70% of that ARV minus repairs. So we said 130. Let me pull up my calculator. $130,000 times 70% gives us $91,000 minus repairs. And all in, I think it'll probably take around $10,000 to just kind of clean this thing up. So we're going to take another 10 off of that, making our offer price $81,000. $81,000, and our improvement costs are going to be 10,000. And we do want to lump those into the loan. Closing costs are going to be 4 points because we're going to pay both sides, the buyer and the seller. Lender charges, they're charging 2 points, and that's basically how your lender actually gets paid. 25% down, and we want to kick this out to a 30-year loan. Rates right now are about 7% for investors. Our rental income investness is saying 1218. And if we jump over and look at Section 8 or HUD, I'll have a link for this site down below as well. They're offering 1410, which is a little bit nicer of a number. And one of my favorite sites is Rentometer or Rentometer. And they're saying the average for the area is 1317, median is 13, high end 14, low end 12. And this was 3-bedroom, 1.5 bath within the last 12 months in a 2-mile radius of the property. So based on all of this, I think we're going to go with this average number here because that is literally in the middle of what everything else told us. We're going to say 1317 for rent. I got to write that down. 1317. And our property taxes, that looks about right. Insurance, I factor in $125 a month or $1,500 a year. Our property manager is going to cost us 10%. Our tenant is going to be paying all of our utilities, and there is no HOA here. Our reserve fund, I call it my war chest. That is 5% for repairs and maintenance, vacancy, and capital expenditures. So 15% goes into a separate account because this is real estate. It's never a matter of if something goes wrong, it is when. And that way, if we have this separate account, now we're not digging into our profits each month to have to pay for something. 2% appreciation rate on the value of the property. I like to increase my rents 2.5% per year. Plan on holding for 10 years, and we are real estate investors. We don't pay full commissions. Locking that at 5. All right, let's see if this thing cash flows. You were waiting to see a number. I know. I got to ask one more time. If you haven't done so already, please hit that like button and share this with somebody who else will find some value in it. Now, let's see if this sucker cash flows for a cash deal. And we have a winner. $290 a month positive net cash flow for $27,000 out of pocket. Almost 23 of that's going towards the down payment. Gives us a monthly mortgage payment of $455.90. So cap rate, it is a high cap rate. To figure out cap rate, that's more of a multifamily thing, but it is NOI, net operating income versus or divided by market value. That's how you come up with that. That's a really high cap rate. Typically, you want to see them below 8. DSCR, they like to see a minimum of a 1.2, 1.1, very minimal. But DSCR stands for debt service coverage ratio. They base it solely off the income of the property. So at a 1.63, this is a really good deal on that. Cash on cash is almost 13%, and your return on investment is over 21%. Great numbers. If you follow the 1% rule, is that the same? Huh. I think that's the first time I've seen that. So the DSCR rate and the 1% rule are actually the same number. I personally do not like the 1% rule, and I can go into another video on that as to why. Just drop me a comment, and I'm happy to share my thoughts. Love the InvestNest because they break all of these numbers down, so I know where each thing's going, basically. So almost $200 a month goes into our war chest, management, taxes, insurance, bringing everything up. And another thing they break down, so off the bat, year one, we're pushing over 12.5, but by the time we look to move on this, we're looking at 22.5% cash on cash return. That's a really good return. And they even go a little bit deeper. So within 6 years on this one, we are at an infinite return. And what I mean by that is roughly at this 6-year mark, we will have all of that money back that we put down in our pocket. And then now from that point on, we're just using the bank's money or OPM, other people's money. Pretty sweet cash deal. Now we're going to do my favorite part and analyze the creative side. This is my creative calculator. You can get it off my website, christhompsonteam.com. Link will also be below in the show notes. ARV, we said we think it's 130. And on a creative deal, we're going to be a whole lot nicer on that. So to get to that number, again, because we're asking, in this case, the seller to be our bank. So for that, I think we offer, you know what? If we offer them the full 130,000 at a 0% interest rate, let's see how that math works out. And now we got to figure out our PITI, or principal, interest, taxes, and insurance, our mortgage payment. For that, we're going to use bank rate. So our home price is 130. I don't ever like to put down more than 5% when I can get away with it. Interest rate of 0. Plug in our information here. And that's 118. 118. Ooh, I like this number even better. 586 for principal, interest, taxes, and insurance. Plug that in. 586. And we said our projected rents were 1317. See what it looks. Oh yeah. I like this cash flow deal a whole lot better. 731 gross cash flow. Same 200 into the war chest, 131 to the management, putting over $400 a month net in our pocket. So our cash to the seller, we said was 5%, which is 6,500. This agent's not doing much. Let's see if we can throw him $1,000 to go away. We are not working with a wholesaler, so we do not have an assignment fee. Closing cost is that same 4 points. And renovations, we said are 10,000. 2 months of holding is just 2 months of this mortgage payment, your PITI, no arrears, and a good TC or transaction coordinator. It's going to cost you about $1,500. So all in, you're $25,000 and you're going to get $400 a month. And that's going to take about 5 years to get all of your original capital back. So for the creative deal, 25 out of pocket. The cash deal, you're at 27 out of pocket. Pretty close. And there you have it, a cash and a creative analysis of this property in Wichita, Kansas. What are your thoughts? Drop a comment below. We'd love to hear from you. Thanks for tuning in again this week to the weekly deal analysis here in the Corner Barn. I am Chris Thompson. We will catch you next week.